Hello everyone, today we are going to make a presentation on the case of Green Valley Medical Center. This is a non-profit hospital affiliated with a large state university. The first question is, what are the key elements of the Green Valley Medical Center strategy? The CFO of Green Valley Medical Center, Mr. Klein, combines both quantitative assessment and qualitative assessment in his strategy. In case of quantitative assessment, he chose the DCF method. The key elements of this method are the discount rate and the incremental cash flow. Firstly, the discount rate is the key to determine the time value of an investment. To get the discount rate, there are plenty of methods, such as the Kappa method and the WACC method. In this case, we choose the WACC method because this method takes different sources of capital into account, and it reaches a hurdle rate that a company should generate to meet the expectation of its shareholders. So the WACC method is suitable for this case to make judgment. As we know from the case, Mr. Klein has collected the figure of balance sheet, also the cost of debt and equity. So according to the formula of WACC, he can finally get the cost of capital. Secondly, the incremental cash flow revealed the real potential cash inflow or cash outflow that only relevant to a particular project. To contain some significant components, such as initial investment and terminal cost of a project, Mr. Klein can get the operational performance of the project. If a positive incremental cash flow appears from a project, he can know that by conducting it, the hospital will get more cash than expense and can evaluate it as a valuable project. In case of qualitative assessment, he chooses the score sheet method. The key elements of score sheet method are the factors and the standard of evaluation. Mr. Klein decides to include economic factors and the social factors. For economic factors, he wants a project with positive NPV, and he also lays an emphasis on the volume of cash outflow, as it is riskier to lose the investment when there is a huge volume. For social factors, he considers the influence of different projects on three types of groups, which are the stakeholders of hospital. He cares about the attitude of these stakeholders. If they hold a strong negative attitude toward a project, then the project will be less feasible in terms of social effect. Compared with quantitative assessment, qualitative assessment is less objective. The scores in the score sheet represent the impact of carrying out a project. The higher the score is, the larger impact the project will have on certain factors. Next, please.
So let's move to question 2. Why does the existing capital budgeting system need to be changed? So as mentioned in the article that Mrs. Klein found an increase of available funds for capital purchases in Green Valley Medical Center around 10% to 15%. But at the same time, the problem is how the money was distributed was not so clear. So let's walk now through the current capital budgeting process to see how the capital is allocated in the hospital. And there are 4 steps included in the process according to the article. The first one is in each service area, the individual submitted requests to their own department head for machine or for the equipment. Second step is once all the requests had been received by the department head, the requests will be reviewed and ranked, and then ranked again together with all the requests outstanding from the previous year. And in this step, the department head will drop all the unnecessary requests, and equipment request form will be made containing the name of the requester, the date, the price, and a brief explanation of the request. The third step, once the final list is done, it was submitted to the hospital's Fiscal Affairs Department. Then the list was consolidated along with all the requests from the different departments to form the master list, the final master list. The last step is the master list would be reviewed and approved by the Board of Trustees at their November meeting. So here is a short introduction of the 4 steps in the current capital budgeting process. And from this process, there are also some issues which are to answer the question, why does the existing system need to be changed? Next, please. So here's the aspects of the issues. According to the article also in Ms. Klein's investigation, the Board of Trustees and the previous CFO obeyed an unwritten rule, which is the high priority is given to medical equipment to the medical department over other departments like administrative department or support service. So the requests tended to be selected very subjectively with their own priority. Also, for the fairness aspect, the CFO, the previous CFO, would try to make sure that each medical department receive at least one spot, which is also influencing the capital budgeting process in a very unscientific way. And then after those financial consequences of the request happened, the financial data they presented are also likely to be very unreliable and even unfounded. So in conclusion, the current budgeting system is strategically not aligned with the hospital's long-term interest or not the best optimization for them. So they need to be changed in those aspects. Thank you. That's next, please.
Okay, I will calculate net present value and the internal rate of return based on the data in the balance sheet and the case. NPV is the difference between the present value of cash inflow and the present value of cash outflow over a period of time. We know that we need the discount rate to calculate NPV. In the case, we use WACC as our discount rate. And the formula is in the slide. It's equal to equity divided by equity plus debt and multiplied by cost of equity plus debt divided by equity plus debt and multiplied by after-tax cost of debt. In the case, we know that it's a no-profit hospital, so the tax rate is 0 and the T is 0. From the balance sheet, we know that equity is a net asset equal $17,054 and for the debt is raised when company borrows funds from other party. This debt is to be paid back at a future date along with the interest amount. So we only use long-term liability as debt. It's 17,350. The equity divided by equity plus debt is 49.57%, and the debt divided by equity plus debt is 50.43%. In the process of calculating cost of equity, we need beta, risk premium, and risk-free rate, but there is no such data in the case. So we can't use the CAMP model and just use data from other hospitals, and the cost of equity is 10%. Cost of debt is interest incurred divided by total debt. Long-term debt include payment on its municipal bonds averaging 6% and fixed mortgage payment at 8%. So cost of debt equals 6.93% and WACC is 8.45%. For the PT proposal, initial investment include cyclotron, cameras, facility renovations. The cash flow in year 0 is the sum of purchased items is minus $5,800,000. The hospitals expect to provide a maximum of 2,300 scans each year. However, 1,600 scans for clinical use and 700 for research. The scans would be profit at an average rate of $1,700. Research scan will get all grants. Clinical use can only get half. So the income is 700 multiplied by 1,700 plus 1,600 multiplied by 1,700 divided by 2. The annual operating expense are $1,700,000. So the annual operating cash flow is $850,000. This is a 10-year project. According to the formula, we use the previous WACC as the discount rate, and we discount each year's data to get NPV. It's minus $210,597 $7.66. Laundry proposal is different from PT project. It replaces existing items by purchasing new items, and it has no income. So we use the cost savings to calculate the NPV. First, the hospitals need to purchase continuous batch washer, dryer sprays, and additional fund to install new equipment. The initial investment in year 0 is $1,025,000. The annual cost savings of new equipment is $50,000, and the labor cost saving is $197,000. So the annual cash flow is $347,000. This is a 15 years project, and the NPV is $1,032,223.94. We know IR is the value of discount rate when NPV is 0 according formula. Respectively, the IR of the PT project is 8%, and the IR of the laundry proposal is 23%. By comparison, we found that the NPV of the PT project is negative, and the IR is less than the IR of the laundry project. So we suppose the laundry project in terms of data. However, the laundry project is not essential items to maintain operations, and the years of two projects are different, so NPV and IR are not the only indicators. We need more analysis.
And now we're going to move on to the fourth question. The question is about how we make a decision. And in order to make a decision, we have to do some analysis. The first analysis is the economic analysis. This part aims to understand the dimension of the investment of the two projects and whether the proposals are profitable. The analysis contains 3 aspects, and we will give grade to each of the 3 aspects. The first aspect is whether total investment is less than $100,000. If it's yes, we give +1 for the score. If no, -1. It's the same thing for the second aspect, whether the total annual incremental costs are less than $200,000. +1 for yes, -1 for no. And the third aspect is about the NPV. If the NPV is equal or greater than 0, we give +2 for the score. If no, we give -2. When we look at this page, we could find out the detail of the economic analysis. First, we look at 2 tables. The first part is investment less than $100,000. We can find from the calculation that both of the 2 proposals has an investment more than $100,000. So we give -2 for both the project. And the second is about operating cost less than $200,000. We can find out that for the PET proposal, it is yes, we have operating cost much more higher than $200,000. So we give -1, but it's not the case for the laundry proposal. So we give +1. And about NPV, thanks to the calculation of our group member, we could find out the NPV of the first project is negative, and the NPV of the second project is positive. So we give -2 for the first one, +2 for the second one. And simply by sum up all the score, we could find out the PET proposal total score of economic analysis is -4, and the laundry proposal has a positive score of +2. Then we move on to the qualitative analysis. The qualitative analysis is to estimate the impact of the proposal to physician, community, and employee in case that it is declined or accepted. And to prevent giving a too subjective score, we take the average score that's given by all our group members. And from this part, we can see that each of the impact aspects will have a score range from 0 to 8. Now we're going to look at the PET proposal qualitative analysis. For the first part, the physician impact, we give -2 for the negative impact if the proposal is declined, and plus 2.5 for the positive impact if the proposal accepted. And the total absolute score for physician impact is 4.5. We give this score is mainly because that several departments require this project at the same time altogether. So we consider it as a really important proposal. And for the community impact, we give a high total absolute score of 5.25. This is because that we found out no PET facility within 600 miles of Green Valley. So we can imagine that if Green Valley could have this facility, it will have a great impact on the community. And the last part is about employee impact. We give a poor score of 3. This is because we consider that only a minority of employees could profit from the PET. Almost just the physicians could benefit from it. And we look further onto the laundry proposal qualitative analysis. For the physician impact, we give a total absolute score of 2.5. This is because we consider that the physicians profit hardly from the laundry proposal. And for the second aspect, community impact, we give a total absolute score of 3.5. This is because we consider hygiene is vital for a medical center. Last part, employee impact, we give a high score of 5.25. This is because that we think if we could have this proposal, the laundry employees could work more efficiently and give a high quality service. And by sum the absolute score up, we get the total score of the laundry proposal is 11.25. Now we can move on to the decision making. After all this analysis we have did, we could just simply make a decision by sum up the score separately. From this chart, we can see that even the PET program has higher score of qualitative 1, which is 12.75. But because of the big gap of economic score, we can find out finally the total score of the laundry proposal has a higher value. So we can make a decision here that the laundry proposal should be accepted. This is all.